your exit more times is more important than your entries, because you can enter like an idiot on a stock, but if you leave with some profit, then you know your entry. No one's going to talk about your entry. If you have a great entry but you don't leave with anything, your exit was terrible. Your exit decided what happened. So your exit more time is more important than your entry. Honestly, it's good. It's important to have a good entry like here. But hey, if you're exiting here and you have a trash exit, it's no good. I know everyone talks about the best entry and stuff, and I do that too. But again, your exit is extremely important, even more important sometimes than your entry, right? So before I talk about the next couple of stocks, I know you had Nike on watch, but yeah, let me just kind of talk about your psychology and discipline, because again, new traders understand this, especially if not even just new traders, especially if you're just struggling overall. You got to start small and scale up. Start with smaller positions, right? If you got a 10K portfolio, $500, 1,000 is more than you can play with, right? And if you manage the risk properly, take it out 20, 30%, it's fine, right? You got to understand that starting small, scaling up is the better way, the best way to really increase your portfolio size. Is the best way to really get some success in the market. Um, the reason I say start small is because when you've started to achieve, you can start showing yourself, hey, I know what I'm doing in this market, right? I've been in, this is an example, right? You're trading, let's say you're trading, let's say you traded Nike from the bottoms right here, 54, 55. You took it up there and you managed it well. Great. You know you can do that again with a little bit of a bigger size when it gets back to those levels, maybe. If you bought in here, sold here, tried to get back in again here, ended up still holding here, you realize, okay, you know what, I'm not ready to get increase my position size, right? So only increase your position size after you demonstrate, consistent profitability. And I'd say profitability over weeks, maybe months. Don't be that person who jumps in today, and then next week, Monday or Tuesday, they're up nice and they're like, you know what, I'm gonna take 5K out of my bank account, I'm gonna put it in stocks, and I'm gonna do this again next week. Nah, show me that you can do it for 2 weeks straight. Show me you can do it for 2 months straight. Show me you can do it for 6 months straight, right? Before you start increasing your position, right? So most of the new traders I know that blow up their accounts is because they just try and they put more money in, or they over leverage, or they have a $1,000 account. They try and put 200, 300, 400, 500 in plays, and then they just blow it up because one trade went well. I see people always joking, oh, I'm a dump 5K in the next call out. I'm a dump 6K in the next call out. Realistically, just because you did two, three, four good call outs, realistically, just because that happened doesn't mean that the next time you take call outs, you're going to do amazing, right? You might not be able to manage it because of psychology. You're going heavy in the trade. It's weighing more on your mind. You might need that money. Those kind of stuff will come into play. So, like I said, scale up accordingly, scale up slowly. Um, and then again, just on so I'm gonna go back to CRWV because that was kind of like the hype stock of this week. Oh wait, RGTI, how did that do? It had a good week, but not as big as CRWV. So CRWV, right? FOMO, revenge trading. Um, what else? Chasing. Some of these stocks have moved crazy, right? Sure, every time you buy in, you probably made profit. It had one red day, which is yesterday. That's fine. You got lucky, let's say, right? The whole week it went from 75 to 116. That's cool. But what about a stock like HIMS, right? You try to do the same thing here. 35, up, sold off. Up, now went from 66 all the way down to 51. So you try and do what you did with CRWV. You try to do what you did with try to do so. CRWV went pretty much straight up, pull back a little bit. People will try and do the same thing with HIMS. People who might have tried to do the same thing with HIMS pushed up, sold off heavily. Guess what? They're in the red now. They tried to chase the hype. They had FOMO. They missed out on the bag. For so many different things. Now what happens next? All right, you say, okay, HIMS is going to go back up. It's going to go back up 2 green days in a row. It's going to go back up. Now you're trying to jump in and you're revenge trading. You're trying to make your losses back and you're losing even bigger now. You're losing even quicker now. You're going to destroy your account like that, right? There's always opportunities for tomorrow. This is a doji right here. This is a doji. This is a crazy candle on a tiny body. That to me is not the kind of trades you should be taking, especially as a newbie, a beginner. If you think HIMS is going to go back up, It might it might also get rejected by the moving average sell off, right? Come back all the way down. You got to be aware of that, right? And the thing I always tell people, right? There's always another trade tomorrow. There's always another trade tomorrow. There's always another trade next week. The market's going to be here next week. The market's going to be here next month. The market's going to be here 2 years from now. The market's going to be here 5 years from now. If you don't take a trade today or in the next hour or in the next 2 hours, it is not going to kill you, right? People think that because they didn't take the CRWV, that it's over. Now we got in late on CRWV, we still ate. Sometimes it's okay to miss out. Sometimes it's even better to just sit down, and just sit down and not do anything. Right? I wrote yesterday, or maybe it was Wednesday in the small account challenge. Right? I said sometimes the best position you can take is no position at all, because not losing is sometimes the best way to build. You only take quality setups. You only take the best setups, the very best setups, right? So quality, that kind of, before I go into the charts again, we're going to talk about Nike and stuff, but quality over quantity every single time. 2 to 3 high quality setups per week instead of like 10 different trades will make your portfolio do everything. What did I tell you about CRWV this week? If I had only traded CRWV this week, could have had a 10K week. But what happened? If I had to take some Affirm, had some SoFi, had some IWM here and there. If I had only traded one stock with 2 or 3 trades, CRWV, could have smashed the markets this week. I didn't. That's what I'm talking about, though. Quality over quantity every single time. It's nice. It's a nice feeling. It's nice dopamine, whatever, when you're in 6, 7, 8 different trades. Cool. What about managing those trades? What about when half of those trades are red and half of them are green? What do you do now? Can't stress it in. You've got to be smart with your trades. Quality over quantity every single time. If you are someone who has a 9 to 5, you're active outside the markets, you're busy during the day, why are you in 8 different trades? Tell me, what good does that have for you? 8 different trades. It's not going to help you. It really isn't. If you're someone who is very, very busy and you're active, you go to the gym, you're outside, you might not have 9 to 5, but you might be doing a side job or side hustle, or bartending, whatever. Why are you in 7 trades, which all expire this week? How is that going to help you? One trade might do really good. 2 trades might do really good. 5 trades are terrible. They're trash. You can't get all those trades correct, right? Not all those trades are going to be correct. A lot of those trades is going to be going the wrong way, because that's how the market goes. Even this week, you might have said, okay, I'm in puts. The market didn't die. Okay, I'm in calls. The market didn't fly. So where's your quality there? No quality is not going to help you. Be smart, you know. Take trades which you see as quality setups, or take trades where you're not too late, you're not chasing, it's not FOMO, you have enough to expire, you have enough time till expiry, those kind of, right? And then I'm not going to say too many points. I want us to get into the charts and stuff, but before we get into the last chart, sorry, into the charts, my last point will be understand what you are trading, right? Someone asked earlier about the target calls, right? And nothing wrong with that, right? You're beginning, you're learning, so I like asking questions. But if you don't completely understand what you're buying yet, just be careful, watch out, right? Because our target calls, for example, expire 6th of June. But your target call expire today. So it's obviously, it's a lot of pressure on your target call, because you need the movement before today. We have how many weeks till the target calls expire? 2, 3 weeks. So it's a little bit harder for you to make money, because you're hoping that the move happens super quick, right? So that's the kind of thing that can happen. When you're not completely sure what you're trading. But again, it's good that you ask questions. It's great that you mentioned it to me. You told me your target call is expired today, so it's you're wondering why it didn't go the right way, that kind of stuff. But yeah, that's why I say overall it's good. It's important to understand what you're trading, because that's going to help you master it, right? Each different stock has different risks, has different characteristics, has different reasons that they might go up or down. CRWV again flew this week while the rest of the market stagnated, stayed flat, barely moved, right? Look, we started up here, we ended down here, but it wasn't just a puts, because it had 3 green. So Gravestone Doji, Dragonfly Doji, it's you're seeing by the candles, right? It was not an easy week for the S&P 500. So again, understand what you're trading, guys. Understand what kind of news is affecting the markets. Understand what kind of setups are there. Understand where the markets are in general, right? So yeah, let me go back to looking at the stocks you guys suggested. And if you have any questions, just unmute and interrupt me. Let me know. But I know Nike and Starbucks had been asked for. So in regards to setups right now, very tough. Doji, Gravestone Doji. Whew, it looks like it wants to come down lower, but it's been a bit janky, right? Gap up, gap down here, gap up, gap down here. It's been a bit janky, so I would wait, but I'd say it's probably leaning to come down. I am a Nike shareholder, so I think in this case, you know what? I like it, you know, for longer term calls. But you wait for it to come down, wait for it to show a sign of reversal, like it did here, even though it was crazy bars, crazy candles. It started to show some signs of strength. And guess what? Then it was a good time to get some calls. But either way, I'll wait for it to come, show some signs of support or consolidation before it moves higher. Then I would say, what's the other stock again? Starbucks, right? Starbucks, okay. Probably similar story. We had a good run, from 1st of May up until 15th of May. Started setting off, slowly setting off. Not no clear bearish direction yet. Starbucks weekly chart is a doji. That's crazy. That's not nice. We will wait for it because it's crazy price action. Nothing really clear, but it is below all the moving averages, so it's more bearish than bullish right now. For those who are newbies, beginners, these three lines are the moving averages. I don't think this is going to continue higher just yet, so I wouldn't get into calls. I would say wait a little bit. Understand, the market is a little bit tricky right now, and a little bit tedious. So yeah, just hold your horses a little bit, right? We said RGTI, didn't we? Quantum, Rigetti. Yeah, looks good right now. Have a zone here. We've Since we touched the zone last month, we've doubled out of there. Stock has increased by more than 100%. Went from $7 to $14. Great. I mean, any questions about RGTI right now or the quantum stocks right now? Okay, none. That's fine. I know QBTS is also on the radar. Great. Looking good. Weekly chart is overextended, overbought. Probably needs to pull back a little bit like it did here. Just a red day here or there. And then maybe calls are good to go once it pulls back closer to the moving averages here. I do like this. I do like it though. OSCR. Puts for now. If you're not familiar with this, I think it's also quantum. So yeah, puts though. Let me know if any questions as well, by the way. But go for it. A little bit. Are you on Robinhood Webull? Does that affect you? Okay. So I'd say, so you're trying to say if you're swinging and scalping at the same time, it can be difficult because you're kind of counterbalancing your account. Okay. Well, usually the swings, you go in with less because you know you're holding them longer, and sometimes you're gonna need time to play out. The scalps are more what day trades and stuff like that. You're holding shorter term, so you kind of know that has to work out more than the swings. The swings can be down, whatever, 10, 20%, 30%, whatever. It's the intraday ones that needs to move in your favor more. So you kind of focus on those more, if that makes sense. You move most of your attention to the ones that have a shorter term expiry, the ones that are more important in the here and now. You get me? A little bit? Okay, I just want to make sure because if it don't make sense, don't worry, I can explain it more. I do get what you mean. I do. The mental aspect. You do. You're making sense. I get it. Like the mental aspect of, oh, I'm already down on this. I can't afford to lose on this, right? All right. Yeah, yeah. Yeah. So funny enough, I'm using the same account to do both, but for the long terms, I'm using a completely different account, completely different portfolio, completely different broker. But so I'm comfortable with the swings and the scalps, but if the market is dying and my shares long term are down, I don't care because it's a different account. But the scalps and the swings, they're both in the same account. So yeah, kind of yeah. But as you get more experience, because you only what a few months in. I mean, you started a few years ago, but you took so if we don't talk about the break. You're a few months in, so it's just kind of being comfortable with it, right? When the market was all dropping like a couple months ago, it was tough, right? It was tough to look at it every day, but you kind of have to have a longer term perspective, if that makes sense. Because what happens is all these big hedge funds and big institutions, they all end up pumping money into the market, and then yeah, it goes back up. But I mean, it's never a guarantee, right? Otherwise, if it was a guarantee, everybody would do it. But it's just it's like one of those situations where you say, okay, it's only a matter of time, right? And you kind of monitor it without being too attached to the outcome in the short term. You focus more on the longer term. Oh, okay. What would you? Yeah, yeah. That's exactly what it is. It's the patience, right? With all the tariff news and Liberation Day and everything, yeah, everything was kind of dropping, right? All of them, Microsoft, Amazon, Apple, Tesla, whatever, all of them was dropping. But a month later now, and it's kind of back up. I mean, this week it dropped again, but you know, all of them kind of back up. So yeah, you're welcome. So what was I talking about? Oh, I was talking about this Trump guy. So he's coming around here with tariff threats again. Like last week, he was saying, "Oh, we might be less harsh with the tariffs. We might be trying to work out trade deals with Europe and China." And this week, he's kind of just said the opposite. So he's just coming and messing things up. He's just saying whatever he wants to say, and obviously, it has an effect on the market. So the reason I'm saying that is you kind of got to be aware when this guy's talking because he can tank it at any time, and that's kind of the problem. He's kind of a wild guy, right? We kind of knew that before he got into office. People thought it was going to be, oh yeah, up, up, up. Hell no, it's not. It's going down, down, down since he messing up. So it's okay. That's Trump for you, right? But the reason I say it's cool is because at the end of the day, we're going to trade what we see. If the market is choppy, we're not going to try and, we're not going to take big L's. We take a 20% loss, 30% loss. If the trade is still there, we get back in. If the market is flying, we're going to take advantage of that. Whatever stocks is flying in that point, we take advantage of it. CRWV, if it's flying, we take advantage of it. RGTI, we take advantage of it. I don't care what stock it is. I don't care who the president is. I don't care none of that. We're going to trade the setups that we see and we're going to manage risk. So again, guys, you might have hella social medias talking, hella social media accounts talking about this, that, and the other. It don't really matter, right? We are a group. We are a community. We trade what we trade together. We ask questions. We put things in front of each other's eyes. You know, other guys put the CRWV on my radar. Some people said, "Oh, look at IWM." Cool. We trade as a community. We focus on us, right? So yeah, it's annoying when Trump talks about this, that. I know it gets on people's nerves, but at the end of the day, we can only control what we can control. That's us putting our finger on the buy button. That's us putting our finger on the sell button. That's us choosing to click buy or sell at any given point, every any given time. That's what we're going to focus on, right? For the rest of this month, for the next month, for the rest of the year, anything, right? So yeah, back to what I was saying regarding the stocks you guys wanted me to look at. RGTI, you know. So look, quantum computing, right? It's been rising ever since Liberation Day, consistently rising. A couple pullbacks here and there, no big deal. It's been consistently rising though overall, right? Um, this is why I also say, have a strategy. If you jumping in at open, let me show you what happened at open with this RGTI, right? It flew out the gate. Look at the big red candle from 12.92 to 13.75, almost jumped up $1, right? That's a good few percentage for a stock that is only $13 at a time. Kept pushing for the next hour, 20 minutes, then sold off, then flew again, then sold off. So if you're trading 0 DTE and you're in calls and you're up here, cool. Take your profits up here. Don't be cutting losses down here because now you messed up big time. And if you're unsure, it's 9 a.m. my time, go to the 15-minute chart and you see, hey, oh, okay, the trade never really invalidated on the 15-minute chart. I should still be good for calls, right? Hourly chart. Okay, it just pull back to the moving average to go higher. 0 DTE again, it's tough. You got to really be mentally prepared. But hey, you're seeing signs that it still calls. If you're trading 0 DTE on RGTI calls, yes, we want to manage risk. But if you're buying down here, or sorry, you're buying around here, it jumps up you up 40, 50, 60%, and it comes down here, and then you sell in, you're doing yeah, I know you're managing risk, but you're doing yourself a big injustice because next time it goes up, what are you going to say? Whenever I sell, it goes up. Nah, you didn't look at the 15-minute chart. You never looked at the higher time frames. You never saw that it just pulled back to go higher. You never looked at the hourly, saw that it pulled back to the moving averages. And you're going to say, oh, the market's against me, this and that. No, you're looking at too short a time frame. Understand what you're doing, have a real plan, have a real strategy, right? Ask questions as well. All right. Do I have any other points I would like to discuss? I'd say yes, I do. But first, any questions from you guys? I have about 3, 4 points, I'd like to discuss still. But let me know any questions from you guys before I go continue. You can type them in the chat in the train discussions or the lounge chat. Otherwise, come off mute and feel free to ask. This is your time, though. This has been a tough week. It's been a rough week, like I told you. So ask your questions, folks. Bring them out. I will answer them. Even if it's a stock, the 9, the 21, and the 200 or 50. This is the 200 today. But so the green is a 9, orange is 21, red is 200 EMAs. That's a great question. That's one of the best questions I've heard in a long time. So yeah, seriously, that's a great question because it's easy for me to stand here and say, oh yeah, EMAs did this and that. IWM, 15-minute chart was good because of the EMAs. But in real time, when you go ahead, go ahead. Mm, right. So there's like I can tell you like 3, 4, 5 different things about the EMAs. This is a great question. I love the EMAs. I love the great question. Um, Give me a stock as well since you're at it. Apple, great stock. All right, cool. So let me. Yeah, go ahead. Yes. Mhm. Exactly. And so just to kind of continue with that point, right? We use the EMAs to identify the trends. Like you said, what should I have said? The, like, look, all of these are pointing upwards. The price, the candles are above all of them, right? The price is hanging above all the moving averages, so it's bullish. Um, this is a steep slope. The 9, the green one, the 9 is a steep slope, right? And guess what? What do you see? A steep uptrend from 50, $51 to $83. That's a steep uptrend, right? Let me add something else. You following, right? Let me add you. Let me show you something else now. You see here, ignore my purple box, right? Do you see what the green and the orange did right here? Okay. You know what that means? So this is a golden cross. That means the shorter term moving average, the 9, crossed over the longer term moving average, the 21. It crossed above. Okay. This is a bullish reversal. It's a buy signal, whatever you want to call it, right? Death crosses the opposite way. But anyway, this is a bullish signal. Okay. So it's a buy. This right here is a buy signal, and I don't just go off this. I go off a few different factors. Like I would probably end up buying here because it came back before it moved higher. But this is a buy signal, a golden cross right there, right? Um, let me give you another point. Every time price went away from the moving average, it came back, and what did it do when it came back to touch the green line? I'm gonna show you like this. I'm gonna show you. It went back up every time, like it bounced. I'm gonna do this. I'm gonna use this. So here, when it came back to moving average, all right, cool. Okay, right here, you following? Every time, okay. And then today, what happened again? Every time, every time it came back to touch. So what? So in theory, this 9-day moving average, in theory, it's not exactly what it is. It's a level of support, right? These exactly. That is six, 6th of May. Oh, of course. Right. So do you understand why when I said the golden cross happened, I would have missed the trade, but I would have bought in here? Okay. Yeah, that's it. This, yeah, somewhere here. Somewhere here. I've got a lot of lines. Even before, maybe. There's one here. There's a big one. Oops. And then both of them cross below the 200. So technically, yeah, one here, back in April. Yeah, yeah. So yeah, man. But wait, hold on. I got one more for you, right? So this is it. When you combine, and I actually have not been doing this recently. Let me see Roku. Aha, yeah, yeah, yeah. Okay. When you combine, see, I got the stocks on deck. When you combine the EMAs with your zones or support and resistance, right? You're gonna see it's going to give you confirmation, right? It's going to enhance how you use the EMAs. If I see like an EMA crossover, price coming to touch the EMA and respect the moving average, and I see it's holding above my level of support, bouncing on my level of support, okay, it's ready to fly. If we come out of this zone, let's say the moving average extends out here, we come out of this zone, bounce on the moving average and go higher. I know, hey, you know, it's calls time, right? So yeah, right. So you're right. I never go ahead. Yeah. So what was it? Which specific part did you want me to go over? Yeah. Okay. I'll start with IWM because that's a trade I took today, right? Makes it easier. So this is a day trade. Yeah. 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 So how about I do this? Then I'm going to answer both questions in one go. I talk about the trade I took today and what my aim was. We can do that, right? So for everybody, today I took the IWM calls, 202 calls, $202 calls, right? So I did that about 7:50, no, 7:45 my time. 7:45 my time. All right, so somewhere here. Somewhere here. So first thing I saw open on a 5 minute chart. Moving averages have crossed to the upside. It's a bullish indication. It's a golden cross. The 9 crossed the higher time frame, the 21, to the upside. Okay. Price was high. It was steadily trending up. That's cool. I'm fine with that. I'm not going to take it till it comes back to the moving average to go higher. Right. Second point. So it comes down to the 9 day moving average, which is around here. And I decided, okay, I'm ready to take my trade. It pushed up. What happened next? It broke below the 9. And I said, yo, that red candle was crazy. My contracts just went from up like 4% to down like 22% because it's zero DTE, right? Lo and behold, what happened next? It held the 21 day moving average. So we broke the 9. That's a red flag. But we held the 21. So that's a green flag. You see these 3 wicks here. One, two, three wicks off the moving average. It kept us strong. It means it's holding the moving averages strong, right? So again, the moving averages are still pointing upwards, right? They're still diverging. Here they crossed over, which is a bullish sign. Here they're still kind of slowly trending upwards. Okay, that's good to know. We haven't broken above the 200, but it's okay. It's a zero DTE. It's not a swing. So we're just trying to get a bit of price action before we sell off. So I entered on a bounce on the 9 day moving average. We sold off below the 9 day moving average, but we didn't break all the way below the 21. So it's still okay in theory. If I looked at the 15-minute chart, because I do look at the 15-minute and the 5 for my entries, right? If I looked at the 15-minute chart, I would see, well, we're still holding above the 9 and the 21 on the 50-minute chart, right? Trade is still good because I looked at the 5 and the 15-minute chart right now. Right, 15-minute chart is stronger because it's a bigger time frame. 1 hour chart, this is where it gets interesting, right? 1 hour chart finished red. But the next candle opened up very green and we started to see some momentum. Now, again, this is a day trade and it's probably a 1 hour, 2 hour trade. So the 1 hour chart is important, but it's not as important as the 15-minute, the 30-minute, the 5 minute. So it's holding above the moving averages. Anytime it's close to the moving average before moving higher, I can take calls, which is what I did the second time. Pull back again, and guess what? Held the 9 day moving average, kept trending higher, 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 higher. And then if you look at the 5 minute chart, you'll see this. So you see the 50-minute chart, you're wondering, could it not push all the way to the 204 where the 200-day moving average is? Well, potentially, but on the 5 minute chart, you see we got held up a few times by the 200-day moving average before we came back down. When we finally broke above the 200, we consolidated again. We finally broke above, and then we did see 203.15, 203.20. Does that kind of make sense? We did. So I was in calls because we got the golden cross at the beginning of the day. I stayed in calls because, I entered my calls because price was bouncing on the 9 day moving average. I sold my call, I'd say for not no necessary reason because it broke below the nine. But if I looked at the 15-minute chart, which I did afterwards, I would have seen it's not really that bad. It's still holding, right? But either way, got back in the trade because I saw the same pattern: pull back, go higher, and eventually it kept pulling back to go higher. It was just very slow, steady, very choppy. It ended up being about 43%, nothing crazy. But yeah, does that kind of make sense? And if it doesn't make sense, ask me more questions. Don't worry, I'll break it down to make it more simple. I like that. Okay, of course, no worries. Um, but yeah, those EMAs when you know how to use them right, it works out well. I'm telling you, showing up pointing out roadblocks. This is a this is one I should have been in about four different times. Bands, bands. Seriously. From $64, $20 jump. Come on, a $20 jump on a 30, 40%, 30, 35%. Crazy, crazy. And every time I said it in the Discord, oh, I'm a trade Roblox. I'm a trade Roblox. I didn't. I went with Roku instead. I don't know why. Roku was so. Look, I really thought Roku was going to break out the zone and start flying, but it never did. So yeah, that's it though. You could trade Roblox. Roblox wasn't. It was steady over the past month. 30% gains. So yeah. Um. Any other questions? I mean, I broke Hood. Oh, I had this one so many times on my radar, and I said, "Oh, it's not pulling back. It's not pulling back." Now it's pulling back a little bit. Hood and Celsius, another one. Oh no, wait. Well, I guess for a while Celsius was pushing it, but yeah, Hood is much more. These are some stocks though. I looked at this one earlier. This was a good one. Yeah, just straight up. The stock is never going to just tank when you see this kind of stuff. It's never going to. It can drop, but it's never going to just tank. A little bit of consolidation here. We're just setting up. Can even drag it a little bit more. Cow. Yeah. Wow. All right, folks. Any more questions before I talk about my last few points? Because I want you guys to build long-term success in the market. Really, that's why we're doing this on our Friday evening. I've been traveling today. We could be doing something else, but for real, when you start to identify things and you can, the idea is to teach you guys how to fish, you'll be okay. Because call outs is nice, but a year from now, if I'm on vacation, what's call outs going to do for you? If I'm not focused or I'm having a bad day outside the markets, what's a call out going to do for you, right? Building long term success is important. So let me know any questions you guys have right now, and otherwise I'll just continue and give my last few points before we end. Let me know if you've got questions. Even if you've got stock you want me to look at, it's fine. Whatever it is, let me know. Let me know. Let me know. On QBTS. Oh, Oh, right here. Exactly. It's a great question. What? This is Tuesday, Wednesday, Thursday. Okay, let's break it down. So this is the 4 hour. It's actually Tuesday. I don't know what's going on right here. 1 hour. Let's see. It's a certain level, huh? This one. Yeah. Yep. Boom. Up. Boom. Yep. Can kind of mark that as well. Yes. Right. And I got extended hours on, so it's, it is. It is. Okay. The right double bottom on the hourly, and then 15 minute. 15 minutes funny. It pulled back to the 200 moving average, pushed up above all three moving average, came back again, and took off. It's like it didn't want to break below. Hourly, hourly, saw the double bottom that you pointed out. 4 hour, 4 hour came back to the moving. I mean, it's not even. This isn't even the moving average relevant. This is more about that level, like you said. Yeah, trees are bottom right on these two candles right here. Oops. Yeah, the 21. I like this though. I like that though. This is what I mean. Right, so this one didn't, you know, this if you were in calls, it never really invalidated again. It held that level. It held strong and went higher. But yeah, guys, this is what I'm talking about, right? This is, if you want to build that long term success, you spend time in the charts. You know how he was able to identify a detailed, a detailed entry. You know, um, what I'm going to say is right, like just about the basics, right? Continuous education is important, right? Markets are always changing. Last year, every time we heard AI, stocks was flying, right? This year, every time we heard a stock could be affected by tariffs, it tanks, it sells off, right? Markets are always changing. You've got sector rotation, you've got different bits of news, you've got different administrations that are taken into consideration, different things that the Federal Reserve focus on, right? So if it means reading books, following experienced traders, analyzing market conditions just with people on your own, reading articles, even if it just comes out to social media, just keep informed, keep updated, right? What worked last year might not work this year. If last year they were talking about AI, if the year before they were talking about EV, if this year they're talking about quantum, stay in tune, stay informed, right? You need to know, like you need to know what's happening with the markets, right? It's like when you have a job. If you don't know what's happening with the company, you don't know what they're working on, you don't know who's getting fired, hired, all that kind of stuff. Guess what? You're not going to succeed there, right? You need to know a little bit. I'm not saying you need to know everything, but you need to know a little bit, right? So trading takes time to master. Right? I don't even think I've mastered it because again, I've taken like IWM today. I sold out early when I knew the trade was good. If you're a master at it, a real master at it, you probably don't take. You probably don't take the L on IWM. So, like I said, take time to learn, take time to stay in the markets, take time to really polish your craft. Right? Be surgical, but be surgical, but also be like what I said. Those trades where you know it's a quality setup, take that. If you don't know if it's complete quality, don't take it, right? If it's a zero DTE and it's 2 hours till expiry and someone's looking for 30, 40%, you don't have to take that. That's not really quality, right? It might be quality to them, it might not be quality to you. So again, quality over quantity all day long. I'm going to mention it again because I just want you guys to get better. I've seen people today, yesterday, this week, taking 8, 9, 10 different trades. They only needed two of those trades. Two of those trades did 300, 400, 500%. That's all you needed. It was in 7, 8, 9 trades for what? And I did it myself. There was a time I was in 5 trades. And guess what happened when those 5 trades? Four. Well, three were really, really good. The other two, no good. 60%. A firm was a 60, 70% loss. SoFi, 70, 80% loss. But then you had CRWV. Then you had IWM double up. So again, quality, quality, quality is what we want to focus on. And then another thing I would say is, again, I know I always repeat this for new traders, but I don't know who needs to hear it today. Remember that money, hey, that money ain't really yours until you cash out the trade, you sell out the trade. The screenshots and that kind of stuff is nice. But that money, even if you cash out trade, the money ain't really yours because you could take it tomorrow in a trade and blow it. But what I do want to say is understand when you need to walk away. I had this conversation with a few people today. Understand when you need to walk away, right? If you're losing 5, 10, 15% of your account in a day and you're trying to come back tomorrow, bounce back, you're going to suffer. You're going to suffer real bad. Know when to walk away. Know when to walk away because, hey, sometimes it's good to just analyze what went wrong. Sometimes it's good to just focus on what you can do better, right? As you guys saw this week, my trades were limited. I took what? I called out what 3, 4 trades in my main tab. If that, I think 3 or 4 trades. I called out what 2 in the small account challenge. I called out a Roku and I called out IWM a couple times. Know when to walk away, right? If you lose 50% of your account in a day, you no way should be trading the next day. No way, no way, no way, no way. I know it's good to bounce back and want to bounce back, but you can bounce back by learning. You can bounce back by studying. You can bounce back by not taking a trade and coming away with zero. That's okay as well, right? So, like I said, sometimes just stop trading, analyze what went wrong, take breaks, avoid, emotional distress, discomfort. Um, Maintain perspective, guys. It's a long road. Just because you took a 20% loss, you're not the worst trader ever. Just because the market went up after you thought it was going to go up after you sold, you're not the worst trader ever. The market don't hate you. Keep a realistic perspective. Don't be somebody that, hey, is so emotional they don't know what's going on with the market. They don't know what's going on with their portfolio. They end up losing it all. Don't be that person. I'm telling you guys, it's not worth it. So that's it, guys. Thank you. We'll see how much the recording session got caught. Hopefully, it got caught. And if not, thank you guys for being here. You got the real raw version, unedited, uncut version. So yeah, tough week, guys, but we did our thing. Yeah, let me know in the chat if you've got any other questions. But that's it. We've been on an hour and 38 minutes. So yeah, just let me know in the chat if you guys enjoyed it. Appreciate it. Thanks a lot. Peace. And yeah, bye bye. Like, subscribe, comment, and share as well.